Who controls your money? It's a simple question, but the answer is not so simple. When you hold a dollar, who made it? Who decided it was worth $1, not 10 or 1 cent? We use money every day. We work for it. We spend it. We save it. We worry about it. Who's truly in charge? Who's pulling the levers behind the curtain? What is money, really? Paper, metal coins? Not anymore. Numbers on a screen, a digital promise. It lets a farmer trade her crops for a doctor's care. A system of trust requires rules. Who makes those rules? The government? The banks? Someone else? The journey of money is a story of power and control. It begins with those who can create money from thin air. Government printing is only part of it. Real power often lies with quiet institutions in imposing buildings. So, let's talk about that central bank. What does it actually do? Its main job is to manage the country's money supply. That means it decides how much money should be flowing through the economy. One of its most powerful tools is setting the interest rate. What is an interest rate? It is the cost of borrowing money. Think of it like a price tag on a loan. When the central bank lowers this rate, it becomes cheaper for other banks to borrow money. And when it's cheaper for them, it becomes cheaper for you and me. Loans for cars. Houses become more affordable. But the central bank doesn't just print all the money. This is a common misunderstanding. The real magic, or maybe the real trick, happens with the other kind of bank. Commercial banks? The ones on every street corner. The ones where you have a checking account. They take our deposits. They keep our money safe. But they don't just let it sit there in a vault. That money doesn't sleep. The bank takes your savings and lends it out to someone else. This is how they make their profit, from the interest they charge on those loans. Now here is the most important part. When a commercial bank makes a loan, it doesn't just hand over cash that someone else deposited. It actually creates new money. Yes, you heard that right. When you get a loan for a house, the bank doesn't pull $1 million from its vault. Poof, new money has just been created. It exists as a debt, a promise. This is called fractional reserve banking.